Hey everyone, Nvidia has been one of the hottest stocks in the market in the last 3 months, 6 months, and year to date. Of course, I'm happy about that. I recommended Nvidia stock as one of my top stocks to buy in 2024. So investors that followed that recommendation made some money on that, and I'm definitely happy about that. Still, Nvidia stock is not for the faint-hearted. It's a risky stock. It's volatile. It has many factors that cause the business to be risky. So that's what I want to elaborate on in this video, since so many investors have become interested in Nvidia stock given its position in artificial intelligence. I wanted to provide more insights into the business, why it's so risky, so that you get a better understanding of that riskiness of Nvidia stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Nvidia's business, its core is that it pioneered accelerated computing to help solve the most challenging computational problems. Nvidia has leveraged its GPU architecture to create platforms for accelerated computing, AI solutions, scientific computing, data science, AV, robotics, metaverse, and 3D internet applications. Some of the most innovative technologies in the world today, Nvidia is helping propel them. Most notably, artificial intelligence. Nvidia powers some of the most powerful large language models, including ChatGPT and others. Nvidia is selling its products so quickly that demand is outpacing supply. So why is that the case? Well, let's get a deeper understanding of Nvidia's business here. So Nvidia is saying that demand for their data center systems and products surged in fiscal year 2024, and that's actually an understatement. In entering fiscal year 2025, we are gathering customer demand indications across several product transitions. We have visibility for our new data center products ramping later in fiscal year 2025. We have increased our supply and capacity purchases with existing suppliers, added new vendors, and entered into prepaid manufacturing and capacity agreements. So, revenue surged in 2024 for Nvidia. Going into 2025, they expect more revenue increases. They're preparing for that by increasing supply, increasing relationships with suppliers, making commitments for capacity and supply, because they're seeing with their conversation of their customers that demand, even though it surged in 2024, it keeps increasing. The appetite for Nvidia's GPUs seems insatiable. Now, that's not going to be the case infinitely. That's not going to be the case infinitely. Competition is coming in. Competition is coming in. They're not going to sit around and let Nvidia dominate this market indefinitely. AMD recently launched its newest GPU to rival Nvidia, and hyperscalers like Amazon are launching their own GPUs that are, of course, not the cutting edge like Nvidia. They're not the best in class, but they're better suited for companies that don't need that best in class. They want better price. They want lower price. And so Amazon and others are offering those lower end chips now that companies are looking at and saying, okay, there's an alternative to Nvidia now. So that's going on as we speak, although all indications point to Nvidia being at least one step ahead of the competition, probably at least 2 steps ahead of the competition. If we're being honest and not trying to be conservative here, it seems like Nvidia is at least 2 steps ahead of the competition. Still, competition is coming in, and even if competition is not as good as Nvidia, they're going to get market share. And I'll tell you why. Because if you're a customer and you're looking at Nvidia and you're purchasing GPUs from Nvidia and you notice how dominant they are in their market share, you want to diversify away from Nvidia. You don't want 100% of your GPU supply coming from Nvidia, because that exposes you to too much risk. You're now reliant on Nvidia, and if something were to happen to Nvidia's supply, then you could be out this critical product or this critical component. Furthermore, if Nvidia dominates the market so aggressively, it can charge whatever prices it wants. It can charge higher premiums, and as a customer, you have to pay because there's no other alternative. So for that reason, customers are going to give AMD and others a chance to catch up, even if their products are not up to par with Nvidia, which clearly they're not. Still, supply of its Hopper architecture products is improving and demand remains very strong. We expect our next generation products to be supply constrained based upon our demand indications. So not only is demand outstripping supply right now, they expect their supply to continuously be constrained going forward. Like demand is still outstripping supply. That's how strong demand is for their products. So they might incur inventory provisions or impairments if their inventory or supply capacity commitments exceed demand for our products or demand declines. And that is a risk for Nvidia. Right now, demand is so explosive that Nvidia is entering into contracts, increasing its arrangements, increasing capacity, increasing orders for inventory with the idea that demand is this high and it's growing. But if there was to be a sudden decrease in demand, Nvidia is going to be caught with all this excess inventory that it's going to have to discount significantly to sell. And that's a big risk for Nvidia stock investors. Even if the probability of that is not very high right now, it's still a risk. It's still a risk because Nvidia is making these increasing commitments for inventory with the assumption that demand is going to continue to be elevated, which according to Nvidia, according to conversations it's having with its customers, remains to be elevated. So it's prudent for them to increase supply. Still, there is a risk that just as it increases supply, there could be a sudden shift in inventory demand and Nvidia could be caught with all that extra inventory. So these product transitions are complex as they often ship both the new and prior generation models simultaneously, and they and their channel partners prepare to ship and support new products. They'll have a broader and faster data center product launch cadence to meet a growing and diverse set of AI opportunities. The increased frequency of these transitions may magnify their challenges associated with managing supply and demand due to manufacturing lead times. So it's already difficult to transition between these product cycles, and now they're going to accelerate these transitions, which is going to make it even more difficult for Nvidia to manage all of this. So qualification time for new products, customers anticipating product transitions, and channel partners reducing channel inventory of prior architecture ahead of new product introductions can create reductions or volatility in our revenue. Simply put, if you're a customer and you know Nvidia is going to launch a new model in 6 months, you're not going to buy that old model. You might wait for that new model to come out and purchase that new model. So if Nvidia is increasingly putting out new models, it might cause a volatility in demand for its products as customers shift their spending patterns to wait for that new model to come out. And while they have managed prior product transitions, they've been doing this for a long time. It's been several decades now, and previously sold multiple product architectures at the same time. These transitions are difficult and they may impair our ability to predict demand and impact our supply mix, and we may incur additional cost. So just because they've done this before and they've done this for a couple of decades, Nvidia is not trying to suggest that this is easy for them, that they know what they're doing now and from here on out it's going to be smooth sailing. That's not what they're telling investors. What they're telling investors is that going through these product transitions and trying to be the most innovative company in this segment has been challenging in the past, and it's becoming even more challenging now as we have to increase the pace of innovation given the insatiable demand for these products right now. So it was already a volatile and risky company before. It's becoming an even more volatile and even more risky company right now as it transitions to a faster pace of innovation. All that being said, I still think Nvidia stock is a good value. I have Nvidia stock rated as one of my top stocks to buy in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.